Hi, everyone. Thank you all for joining us here today. We're just going to wait a few more moments for more people to join, and then we can get started. How are you all doing anyway? Let me know in the chat. I'm doing great, thank you. Looking forward to getting started. Thumbs up from Anita. Okay, just a couple more minutes and then we'll start, or I'll start the session. Hey, Caroline, thanks for joining. No, I can't hear you. Everyone else is muted apart from me. So unfortunately, I can't hear you, Caroline. You can type in the chat though. Hi, Elena. Thank you for joining. Okay, well, let's begin. So, hi everyone. I'm so thrilled to see you all here today. I love seeing some familiar names in the chat, and wow, lots of new faces, which is fantastic. So to give you an overview, I'm Lissele, and I help and run, I'm the co-founder of Capitalize and Chief Growth Officer. Today is going to be really interesting. We're diving into something I'm genuinely passionate about, building payment frameworks that actually work in the Forex world. You know what? While we're getting settled, I'd love to learn a bit about you today. So drop a quick message in the chat and let me know where you're joining from. Portugal, nice. Nigeria, very cool. London countryside. Nairobi, Kenya, very cool. I'm joining from Dubai, so it's a bit dark here. I was actually just in London a couple of weeks ago. Very cold, which is why I'm here now. South Africa, very cool. I definitely really want to go to South Africa. So before we dive in, let me quickly share about Capitalize. We're an award-winning payments and banking consultancy. And here's what that means in real numbers. We've built something pretty special here, a network of over 100 fintech partners and growing every month. We serve more than 85 institutional clients globally. Our team brings more than 20 years of combined finance experience. And something I'm particularly proud of, we offer ongoing dedicated client support to help you whenever you need. Here's something that surprises many people. Our services are completely free of charge. Yes, you heard that right, 100% free. We work with a secure and trusted panel of regulated providers, and they compensate us directly. I'm also excited to let you know that we'll be joined later by Nauman Abuzar, Director of Product Risk Solutions at SEON. SEON stands as the first line of defense against fraud and money laundering. As a global leader in fraud prevention, SEON works proactively to stop fraud in its tracks, safeguarding businesses and their customers at every step of the journey. He'll be sharing some fascinating insights about where our industry is heading. We've structured this session to be interactive, so please feel free to add your questions in the chat as we go along. My team will gather them for our Q&A by the end of this webinar. Now, before we move forward, I want to mention something valuable we put together for all of you. We've created a comprehensive guide for you that you can have at the end of this webinar. Now, this isn't just an industry report. It's a practical guide packed with actionable strategies, real-life studies, and essential tools you can use right away. And we cover everything from compliance frameworks to payment optimization, basically everything we're discussing today, but with even more detailed insights. My team will share access details after this session, so stick around if you'd like to dive deeper into these topics. So let's start with something really fundamental. A question I get asked all the time. Why exactly is Forex considered high risk? You know, it's interesting. I meet with Forex businesses almost daily. There's often this genuine confusion about why we face so many payment challenges. So let me break down the four major factors that make our industry particularly complex. First up is volatility. Now, this one's fascinating. Think about it. Forex prices can swing dramatically in just minutes. While that means great profit potential, it also means big risks. When banks and payment providers see these rapid swings, especially with unusual transaction patterns, their risk alert starts going crazy. And here's the second one, and this might surprise some of you, the lack of clear regulations. We're operating in this global space where there's no single rule book. Banks get nervous when they can't clearly tell which country's laws apply. And honestly, I don't blame them. And third factor, and I see this all the time, chargebacks. In Forex, we're not talking about small transactions here. These are often high value moves, which means each chargeback carries some serious weight. It adds this whole extra layer of complexity to everything we do. Last but definitely not least, money laundering risks. Banks are incredibly wary about this one. Without rock-solid anti-money laundering measures, both Forex companies and their banking partners could face some pretty serious consequences. So, I'm really curious about your experiences here. I'm going to launch a quick poll, and I'd love to know which of these factors has created the biggest headache for your payment operations. Is it the volatility, the unclear regulations, those tricky chargebacks, or money laundering risks? You know what's really interesting? While you're voting, let me share something we've noticed at Capitalize. Many payment and banking providers are still trying to understand how modern Forex businesses handle these risks. They're often working with outdated assumptions and technology, and they just don't match where our industry is today. So let's talk solutions. How do you actually manage these risks as a Forex merchant? Let me share some practical examples. The 4 most effective risk management strategies we've seen work consistently across different markets. The first one is having a really robust KYC and compliance monitoring process. This is absolutely non-negotiable. Second is a big one. Never put all your eggs in one basket. Having backup providers is important, so we suggest to always have 2 to 3 providers in your back pocket. Trust me on this. You never want to be caught off guard if one provider suddenly decides to stop working with the industry. And I've seen it happen quite a few times. This one's crucial. Really understand each market you're targeting. Know the laws, know the regulations. It'll save you so many headaches down the road. And finally, maintain a clean processing history. Now, this is your reputation we're talking about. I'd love to hear from you on this. Drop in the chat which of these strategies has been the trickiest for your business to implement. What's been your biggest challenge? Maintaining strong KYC. Yes, that's definitely a challenge. Now, let's look at where we are right now in banking and payment processing for Forex. Oh, I just saw another answer, multiple providers. Definitely difficult managing those as well, especially when you're dealing with lots of different ones in different areas. KYC, yeah. I see this a lot too. Now, let me share something quite eye-opening about the current state of our industry. Just last week, I was speaking with a Forex broker who had been with the same bank for 5 years. 5 years of perfect compliance, steady growth, and then suddenly they received a notice giving them 30 days to find a new banking partner. Unfortunately, this is becoming all too common in our space. The reality is, our payment and banking landscape is changing at lightning speed. We've got traditional banks scrambling to catch up with digital transformation, central banks exploring digital currencies, and new fintech solutions popping up almost weekly. It's exciting, but let's be honest, it's also creating some real challenges. Here's something fascinating. Think about how completely different payment preferences are today than compared to just a few years ago. Your clients, they want everything. Apple Pay, QR codes, and some even want to use crypto. But here's the thing, and I see this tripping up businesses all the time. Implementing these payment methods in Forex isn't just as simple as flipping a switch. So let me give you a real life example. We recently worked with this Forex broker who was crushing it in Southeast Asia. Trading volume, through the roof. Risk management, spotless. But they were losing clients left and right. Why? Simply because they couldn't offer local payment methods. The fix wasn't just about adding new payment options. We had to find trusted local providers who actually get both the payment landscape and what makes that Forex trading unique. Now, let's talk about something that I know keeps many of you up at night. recovering funds from emerging markets. It's not about getting money in anymore. It's about getting it out efficiently and compliantly. You know what we're talking about? What we're seeing works? The most successful brokers are building multiple repatriation pathways. Think of it like having several escape routes. You might not need them, but you'll be glad when they're there. You'll be glad they're there when you do. So here's a hot topic, and I'm sure a lot of you are interested to hear this: card processing. So let's be honest about this one. Getting competitive rates is tough. But here's something interesting. It's not always about volume. Sometimes smaller players with better risk management strategies get better rates. We've seen smaller brokers secure better rates than larger competitors. Why? Simply because they could demonstrate better risk management, transaction monitoring, and a clean processing history with a reduced chargeback ratio. So, I would love to know from all of you, how many of you have experienced sudden rate increases from your card processors in the last year? Let me know in the chat. You have? Yeah, it's very common. Those responses of dealing with payment challenges don't surprise me. But let's talk about why this happens and, more importantly, how to prevent it. Now let's dig into something even deeper: swift access. You'd think this would be basic banking 101, right? But it's becoming a real headache, especially for offshore entities. The problem? Traditional banks are still looking at Forex companies through these totally outdated lenses. They're not seeing how modern risk management and compliance have evolved. This brings me to perhaps the most pressing challenge: maintaining reliable C2B and B2C banking relationships. The complexity here isn't just about meeting regulatory requirements. It's about demonstrating to banks that you understand their concerns and have built your operations to address them. Now, you know what's ironic? Most traditional banks simply weren't built to handle the volumes and velocity of transactions we see in Forex today. Their legacy systems struggle with real-time risk assessment. Their compliance frameworks are rigid, and their technology often dates back decades. So, let me ask you this. Which of these banking challenges has impacted your business most severely in the past year? Unexpected account closures? Payment processing restrictions? Compliance requirements? Or rising operational costs? Now, while we wait for those results, let me share something encouraging. We're seeing a new generation of banking and payment solutions emerging, specifically designed for the unique needs of Forex businesses. In fact, this leads perfectly into our next discussion about future trends, where our guest speaker, Nauman, will share some fascinating insights about where our industry is going to be heading. Now, let me touch on something really important: why traditional banks struggle so much with Forex. There are two key issues that keep coming up over and over again. First up, traditional banks are like family sedans. They're great for your regular day-to-day driving, your basic business operations, payroll, standard accounts. But Forex is like a racing car. It's a completely different league. Second, and this is crucial, these banks' tech infrastructure just can't handle our transaction volumes. Think about it. When you're processing thousands of transactions per day across multiple time zones, needing real-time settlement, Traditional banking technology is like trying to drink from a fire hose with a regular drinking straw. It just doesn't work. Or at least it's extremely challenging. So my clients have faced. So type yes in the chat if this sounds familiar. I'd love to know. Now, I'm really excited about this next part because we have someone who's absolutely at the forefront of the fight against fraud and money laundering. Please join me in welcoming Nauman Abuzar from SEON. Nauman brings over a decade of experience in AML, regulatory compliance, and anti-fraud solutions. He's worked across fintech, payments, crypto, cross-border remittances, basically all the areas that keep us up at night. Nauman, welcome.
Thank you so much, Lissele. Thank you so much. Really appreciate for having me here.
Thank you. Such a pleasure to have you here. And thank you so much for joining.
My pleasure.
So before we dive into the specific trends, I'd love to hear your perspective on what you're seeing in the Forex payment space from a risk perspective.
Well, definitely the Forex industry face unique risk, particularly around money laundering and fraud due to high transaction volume and the speed of trades or transactions. And, money laundering is a very common risk where, illicit fund can be disguised as a legitimate transactions, often, across multiple jurisdictions, and make it really difficult to detect these, patterns and anomalies. And as everyone was mentioning, identity verification is a very common challenge risk because every country have their own KYC standards, which can be complicate compliance and allow some gaps also for fraudsters to exploit this. And Forex companies can manage these risks by strengthening their KYC procedures, ensuring risk-based approach, and covering high-risk jurisdictions, and align with the FATF recommendation as well as regional AML regulation, and that can help evolve them against this evolving financial crimes. We at SEON also provide some holistical approach for our customers to adjust their jurisdiction and regional KYC needs. So yeah, that's what I usually see that around the risks.
Very interesting. And obviously you're at the forefront of this, so it's really great to get your insights, and I'm sure the attendees are definitely gaining some valuable knowledge from this as well. So, I've got several burning questions that I know our audience is dying to hear about as well. Let's start with the hot topic everyone's talking about, crypto. There's so much buzz around it, but let's cut through the noise. What's the real potential impact for Forex businesses, especially when it comes to solving some of those traditional banking headaches we just talked about?
Yeah, well, crypto has a very tremendous potential, for Forex businesses, by offering faster and accessible cross-border payments and transactions. Unlike, traditional banking, which can be slow, costly, compliance challenging, you can say there are really like a lot of oversight, where crypto allows like for nearly instantaneous transaction and bypass many of geographical restrictions that often compliance complicate the cross-border for Forex payments. I think with digital currencies, Forex companies could reduce reliance on traditional banking and potentially lower transaction cost. However, crypto can also reduce risk around and requires a very robust AML practices to prevent any misuse and chargebacks, as you mentioned, and especially in a digital asset that can be where it could be harder to trace or harder to relect back. but by integrating these crypto solutions can, of course, continuously help Forex businesses to streamline payments without compromising compliance as well.
Great. Yeah, very interesting insights. And obviously, yeah, if you're dealing with crypto, it's so important to maintain very strong AML, right?
Correct.
Because it is high risk. So let's look further down the road, say 5 years from now. What major shifts should we be watching in payment processing? More importantly, what should everyone here be doing right now to be prepared?
Well, I mean, very, very fascinating question. And I mean, how the world, the regulations are evolving around the globe and the trends as well. I think next 5 years will likely be see more real-time payments, growing, use of digital currencies like stable coins, and stronger regulatory controls as well. Like, the oversight would be getting more and more. And I think with digital assets, Forex firms will need to adopt a robust AML and fraud detection frameworks and solutions to keep up with the risk. If we talk about a major milestone like MiCA regulations across Europe will definitely create establish a very comprehensive framework for digital assets, and of course it will definitely somehow applies or implies on Forex businesses as well. And then of course in 2026 we are expecting a new regulatory oversight, AMLA, Anti-Money Laundering Authority from Europe, who will set some kind of uniform and centralized framework and oversight on European entities. And then, of course, it will definitely increase compliance requirement for Forex businesses, and they should be prepared to reinforce these KYC, AML, transaction monitoring, and proactively, it will definitely proactively help them to mitigate any kind of regulatory obligations or penalties as well. And as you know, it's quite a high risk business, and if they will be on top of it, definitely there's a very good chance to survive.
Okay, interesting. And yeah, I have to agree with you on real-time payments. It's only growing, right? And there's more need for it. And people want to do payments in real time. They don't want to wait 2 or 3 days to receive a payment.
Yeah.
And there's new technologies evolving all the time to do real-time payments as well. So now here's something that affects everyone in this room. It's an interesting topic, which I think you would have a lot of insights about, Nauman. Regulatory changes. What shifts are you seeing here?
Well, I mean, as I mentioned just now, MiCA is one of the major milestone achieved by EU regulators, and then of course 6th AML directive and upcoming AMLA centralized oversight for Forex firms in this region would be more, will definitely face more consistent and rigorous standards. If we talk about other regions, APAC, like Singapore, Hong Kong, they have enforced strict AML regulations, require a pretty strong enhanced due diligence and transaction monitoring for high-risk accounts and for high-risk verticals. And US, of course, after this, major impact around Binance and FTX, US is also expanding their AML laws for crypto, impacting, of course, definitely going to impact Forex businesses, and those are handling, digital assets. Then, of course, if we focus more on, Middle East, definitely you're currently in Dubai, and Dubai has recently implemented a very, very strong and robust AML frameworks and guidance for digital currencies as well. And this will definitely, help. And I have seen a lot of shifts of businesses towards these regions implementations. But as regulatory demands evolve, Forex companies need also tools to to enable their compliance teams to adopt these changes and test new rules, try to be on top of everything. And I think they would definitely require regional AML experts and teams to manage these type of risk. That's pretty important to spend and expand their AML compliance operations and logistics.
Great. So you've mentioned potentially the US will be interesting to see how that goes. And you mentioned Singapore, Middle East as well. There's a massive shift right now. Everyone's talking about it here with crypto regulations and everything like that. Would you say, are there any other particular jurisdictions that should be on our radar as well?
I think, currently Canada is also pretty much, I have seen a lot of startups going to the Canada because of very, I would say seamless process for their onboarding through the regulator, but I would definitely see that in coming years Canada will also expand their digital currency regulations. But I have seen a lot of growth in Canada, North America, South America also is one of the biggest region for these crypto and the Forex businesses. So I see that in coming years they will definitely expand their regulatory compliance and frameworks will enhance more and more, because currently regulators are also trying to adopt this industry, and it's quite challenging for them as well. But I see that we are on the right track now.
Yeah, I mean, it'll be very interesting to see how the next few years go in regulatory compliance. And I agree with you. We're seeing a huge boom right now in Latin America, especially for Forex businesses.
Correct.
Yeah, it's interesting to see. So I want to get everyone's thoughts right now. Which emerging technology do you think is going to be the game changer for Forex payments in the next 2 years? So here are the options: facial recognition, AI, or machine learning. Let me know in the comments. I think it's a bit delayed, but I'll give you my answer, Nauman. I believe AI is really going to be, we have one, AI. AI is going to be really transformative over the next couple of years. Would you agree on this? Does this match with what you're seeing in the market as well?
Yeah, I mean, I see it from different perspective. Of course, there are certain things that we need to see from operation and then, of course, compliance perspective. That if we talk about more from the payment side, of course, AI is going to be a big game changer. And I have seen currently many companies are trying to implement and training their AI models to adopt their operations. But I think blockchain and digital currencies are increasingly relevant to the Forex payments, and blockchain technology can improve transparency and efficiency across cross-border transactions. And Stripe is the biggest example right now. It's a very hot topic, and then how they acquired a stablecoin platform Bridge and for such a big company to acquire this technology, is just to streamline their and mainstream their tool to bring efficiency across their payment method, and they want to make it more swift. It really fascinates me that how such a big company are still looking for such technologies to expand and enhance their solution. But on the other side, of course, if you talk about to ensure AML KYC, then of course there are like identity verification solutions that using AI technologies to detect fraud or detect anomalies around the monitoring and adopting these day to day. And there are like recent guidelines come through Wolfsburg how to use AI within the AML framework. And we at SEON also work with a lot of high risk vertical companies, and we are also working on utilizing machine learning AI tools not to only automate the process of day to day for AML compliance, but also to detect anomalies for such a big different patterns that could not be detected or found through the usual rules based approach. So I think yes, I mean AI is key, but again we definitely need to utilize AI and train it well based on the guidelines to get more better approach. And regulators are also quite having a very great oversight on solutions that are using AI within the AML or even payment spaces. So
Yeah. I feel like ever since last year, it's just taken AI has just taken such a huge boom, especially in the payment space, in compliance, and AML and everything like that. So it's really interesting to see how AI is going to be able to transform high risk industries and help streamline their operations and make everything compliant, being able to, like you mentioned, spot anomalies in payment monitoring and everything like that. So yeah, it'll be very interesting to see. And it'll be interesting to see where it heads in the next couple of years as well.
Yeah.
So before we move on to global expansion, any other tech insights you think our audience needs to know, or our audience needs to know about to stay ahead of the curve?
I mean, if we talk about navigating these cross payment, border payment, or Forex payment regulation, I think it's challenging and varied region by region. And I think the practical approach is risk-based approach framework. And I mean, we have to use solutions and that have a full holistical view. And there are like a couple of other emerging technologies that utilize such kind of ways to have an oversight around your AML compliance controls and even payment operations. And I mean, and also like as I mentioned, like at SEON, we definitely take this approach to meet not only help mitigating these risks, but also we are on top of new tech regulatory trends and build solutions around them to help our customers to get these things get on top of it. So yeah, definitely they are like with these flexible technologies and clear compliance strategy, Forex firms, crypto, cross-border payments can effectively reduce exposure to financial crimes and fraud and AML risks.
Thank you, Nauman. And I also just wanted to add in here, with the rise of AI, obviously with financial regulations and compliance, we're using it for a good cause, but there's also a rise of people using AI for the wrong reasons, right?
Exactly.
So there's a huge rise in fraud happening, deep fakes. People are getting smarter and smarter with the use of AI. So yeah, would you have any comments around that?
Yeah, I mean, another example is AI bots creating multiple accounts, and I think there is a lot of and as I mentioned, like as we are evolving, utilizing of AI on detecting these anomalies, but we also see different trends on the fraud side and how they can exploit and find gaps to abuse platforms and try to do fraud and money laundering. I think we need to be on top of it, everyone in the industry are currently working and fighting this, fraud and financial crime. And so yes, definitely these are current, and these AI bots creating multiple accounts. This is something very new, and I have seen a lot in the recent news. And solutions like SEON, we help detecting anomalies like coming in from same IP and same device information, can help detecting these type of fraudsters and trends, and you can block them before they jump into your platform. So these are like PKYC checks that we do, and and I think we need to implement such solutions across the industry to mitigate such patterns and block them out, that definitely.
Wow. Yeah, it'll be interesting to see how it plays out, and it must be a huge task for your side of the Forex market as well to be dealing with. Probably interesting as well because it's something new. So thank you very much, Nauman. Those insights are gold, and you've been so informative and very insightful. So really thank you so much for your time. Especially as we think about scaling our businesses and Forex operations.
Thank you for having me. Really appreciate that.
Of course. Thank you so much. Thank you so much. So let me build on what Nauman shared and talk about managing currency exchange risks. This is something we work with clients on daily. Now, here's what really works. Forward contracts and options for hedging against unfavorable market movements. Natural hedging, matching your revenues and expenses in the same currency. And here's a pro tip, using multi-currency IBANs to cut down on FX conversions. Now, this is where it starts to get really interesting. I want to share some real stories from the trenches. Now, these are actual cases we worked on at Capitalize. Of course, I'll keep the names under wraps, but I think many of you will see yourself in these stories. Let me start with one that I know will resonate with many of you. Now, this is a case study of a client of ours, a Forex broker operating with licenses in Mauritius and Seychelles. I know some of you are nodding already. You know exactly where this is going, right? Their big challenge? They needed to receive US dollar directly from retail clients. Sounds simple enough, but with offshore licenses, not so much. Here's where it gets really tricky. They had to follow this fundamental rule. Funds must always go back to the source. This meant they needed both C2B accounts for getting client funds and B2C accounts for processing withdrawals. In today's banking climate, it's very challenging. So what made this case particularly spicy was the combination of offshore licenses and direct US dollar transfers. But here's the good news. We found them a solution where they could have an account in their own company name in each of their offshore entities, allowing them to receive deposits directly from their customers into their own dedicated account in 40 plus currencies. This enables the client to have a central IBAN and receive payments in from all over the world. The good thing about this solution is that it's held under a tier 1 bank in the UK, one of the highest forms of regulations in the world. Now, this helps assure the clients that their funds will be held securely. So I'd love to know, now this is a question for you guys. How many of you are wrestling with similar US dollar payment challenges right now? I mean, it could also be US dollar, so it could be US dollar or euro payment challenges right now. So drop a yes in the chats if this sounds familiar. I'd love to know. Now, let me share another fascinating case that shows a completely different side of innovation, payment innovation. This one involved a heavy hitter in our industry, a Forex broker with licenses all over the world. Oh, getting a lot of yeses. That's great. Their ambition was pretty bold. They wanted to give each of our regular customers their own named virtual IBAN. Think master sub-account solution, but at scale. What made this particularly interesting was the scale of the operation. We're talking about a broker with multiple entities across different jurisdictions. The solution needed to be both sophisticated and compliant with various regulatory frameworks. The breakthrough came when we connected them with an FCA licensed institution that could offer this solution through a tier 1 bank. The result? We successfully onboarded 7 of their entities with our banking provider. The key lesson here, and this is crucial, sometimes the solution isn't about finding a single provider, but about creating the right partnership that can scale with your business. Now, another question for you all. I'm very curious to know, how many of you are currently looking to implement virtual IBANs in your business? Raise your hands using the webinar controls, or you can just drop a yes in the chat as well. What these cases really show us is something crucial, even in today's tough banking environment. There are always solutions if you know where to look and how to structure your approach. The key is understanding both the regulatory requirements and the technical capabilities of different providers. Before we jump into Q&A, here's one thought about these cases. Success in payment integration isn't just finding a provider, it's about building a framework that can grow with your business while staying compliant every step of the way. Also, just wanted to drop this in here. I'd love to let you all know that my team will be attending Finance Magnets in London in a couple of weeks. And also our head of business development, Caroline Moreno, will be speaking there too. So if you're there and would like to meet in person, please feel free to reach out to us via the QR code in the presentation. Now, on to Q&A. I'd love to hear from you what questions you may have. Let's make this interactive and really dig into the challenges you're facing. Let's see some of the questions. Okay, so we have a question from Ariana, which is, for companies struggling with sudden account closures, what proactive steps can they take to avoid these disruptions? Okay, so if you're looking for the Q&A, there's a button next to the chat where it says Q&A only, so you can ask your questions in there. So to answer this question, diversifying providers is so important. Having more than one banking provider can safeguard operations. Additionally, maintaining regular communication with banks and updating them on a significant change in business operations can reinforce trust and reduce the risk of account closures, of sudden closures as well. So yeah, it's super, super important. And I say this to all of my clients, definitely have at least 2 or 3 plus providers in place. I would say 3+ to be honest, because you never know what happens. Some banks may be de-risking, some banks may get some banks or payment providers may get a new head of compliance on board, and then they decide that okay, they want to de-risk their company. So the ones to go are usually gambling, crypto, and Forex. So yeah, I would always recommend having 3+ providers in place just to be safe. Other questions? So there's a question for Nauman. Nauman, I'm not sure if you're still here.
I am. Yeah.
You are. Okay, great. So there's a question from Anita. And she would like to know, what are the most common risk signals that Forex businesses tend to overlook, and how can they address them?
Well, I think there are like a range of unique risk, and some of the signals can slip under the radar, and if not carefully monitored, right? Like one of the common risks I usually see is unusual transaction patterns, big anomalies that could not be detected using these rule-based approach. So I think this is one of them. And then of course ID verification, KYC, mismatched information from the document. So definitely we need to have like automated solution that could capture such discrepancies during the onboarding. Rapid account turnover is another overlooked signal. And then of course the really important one is the IP and device information, and monitoring them on behavior basis. So these are some of the signals that definitely overlooked by not only by Forex industry but most of the industries, and this could help them to lead and detecting such anomalies proactively, and can reduce and mitigate that kind of risks.
Thank you. Well, I hope that was insightful, Juanita, and that answers your question. Any other questions? I'm just having a look up the chat. Oh, I think I see one from Victoria. Okay. Oh, let me just see. Question is, yes. Okay. Very good point that you've mentioned here, Victoria. So the reason why we've developed this this structure for our business is because me and my co-founder and some of the senior team in our company, we come from working at some of the biggest payment companies in the world. We come from working in the City of London. So we have very good relationships with banks. We have very good relationships with EMIs and payment providers all around the city. So through this network that we've developed, we can negotiate on their behalf, which actually in turn results in them getting a much better deal than if they was to go direct to the provider. And just to answer the question on so how do we ensure that we're aligning with the client's interests? So we take the time to understand each and every client, what they're looking to achieve, what their current payment challenges are, what their pain points are, and our interest aligns with the client. We want them to be happy, because happy clients will stay with us for years to come. We've been running this business now for almost 6 years, and we have clients coming back to us on a regular basis purely because they are happy with the solutions that we provided them with. So yeah, our interest doesn't align with getting the most commission. It aligns with satisfying our clients, making them happy, and giving them the solutions that they need, because that's how we keep them coming back for more. So that answers the question. And yeah, I think that's it. If you guys have any other questions, feel free to reach out to me directly or to Nauman or to any of my team. You have the QR code there. And yeah, just to also add in, for those who'd like to dive deeper into any of the topics we've covered today, don't forget to download our white paper. It goes into much more detail about many of the strategies we've discussed. So thank you all for coming today. Thank you so much for your time. I really appreciate that you've joined me in the webinar. And feel free to reach out to me on LinkedIn if you have any other questions, or feel free to say hi. I'm always happy to continue the conversation. Thank you. Bye, everyone.